When should you sell your property to capitalize on your equity, and when should you rent it out and hold it longer? If you're currently in this situation and you want to know which option is best for you, then you're going to want to watch this video. Coming from someone that owns just over $1 million of rental real estate, I wanted to share with you some key factors you must look at when looking to either sell or rent out your property. Because this is a huge decision, and at the end of the day, you do not want to leave money left on the table. I'm personally in the situation where I'm thinking about keeping my primary residence to rent it out and hold it longer, or if I want to go ahead and sell it, capitalize on the equity, and then use that to go buy more real estate. I thought this would be beneficial for you all watching, for me to go over the 3 key factors that you want to look at when deciding on if you're going to sell your house or keep it and rent it out. See how I would analyze my personal property with real numbers to see what makes more sense, rent it out or sell it. I'll also give you a couple more scenarios to think about when you are in this decision, and at the end of this video, I'm actually going to give you a free resource that's so easy to use, and it will help you decide which decision is best for you personally. And lastly, before we get into it, if this video brings you any value or entertainment, I would greatly appreciate you giving this video a thumbs up, which would help my channel grow and help with the YouTube algorithm. Now, the first key factor when deciding on if you're going to sell your property or keep it as a rental is return on equity. Over time, your property gains equity, and that's either by loan pay down as you pay the mortgage every single month, or by living in it long enough that appreciation kicks in and values of other homes around you start increasing, which in hence will increase the value of your property. Your return on equity is basically your annual net income you would have on your property based on the equity you have in your property. And to break it down a little bit further, how you would calculate this would take your annual net income from your property, divide it by how much equity you actually have in the property, and then times that by 10 and put a percentage sign at the end of that number. For example, let's say you own a property that's worth $500,000 and you owe $300,000 on it. That means that on that property, you have $200,000 of equity. Now, let's say during your decision, you meet with a real estate agent and they can promise that you will make $20,000 of net income at the end of the year from your rental property. By plugging in the numbers, that would be a 10% return on equity. Now, honestly, this is up to you to decide if that's a good enough return for you or not. But then from there, you're gonna have to decide, okay, can I sell my property, take the $200,000 of equity, invest that into something else, and can I get a greater return than the 10% that I'd be getting from this property if I held on to it? If the answer is yes, I could sell it and get a better return, well, that's maybe something that you want to look into. But if the answer is no, you might want to hold on to your property a little bit longer till you grow your equity in the property. Your return on equity lowers, and then you will be able to put that money into something else that would be able to get you a better return. The second key factor when deciding what to do with your real estate is capital gains. Capital gains is basically the profit you would make from selling an asset that has increased in value over the holding period that you've had it. And in certain scenarios, you will have to pay a capital gains tax from the capital gains that you earned from your property. Once you own it for over a year, that's when it's considered long-term capital gains, and this capital gains tax will be in effect when you sell it. And unlucky for you, but very lucky for the United States government, they get a piece of the pie when you go to sell your property, and some of that profit will go to them, but only under a few scenarios. My advice is to go to your accountant or your financial planner and see if this is even something you're going to have to worry about. From my research and what I've been told, if you've lived in the property for 2 out of the past 5 years, you're actually exempt from the capital gains tax up to $250,000 if you file as an individual, and up to $500,000 if you file married jointly. Now, the reason the capital gains tax is such a key factor is because it can eat into your overall profits, limiting how much you can invest and ultimately limiting your return on investment. The last key factor I'll be going over before we head into analyzing a deal to see if we should either sell it or rent it is your market. Now, depending on your market, location, and future developments could all play a part on you either keeping your property or selling. For example, if you are in an appreciating market and there's population growth year after year, then you may want to hold on to that property, because if there is population increase year after year, there's probably going to be market demand for rental properties to where you could keep your property, rent it out, and in a couple years end up selling it and making a greater profit than you would now. But vice versa, if you are in a market that is not appreciating, there are not businesses coming to the area, and population growth is not increasing to the amount that increases the property values in the area, then you may want to consider selling that property. There are different things to look at depending on your scenario, which later in the video I will be going over different scenarios to think about when deciding on this decision. The best course of action I can tell you is to go out and talk to an experienced real estate agent, and they can tell you how homes have increased in value year over year for the past couple years. This will give you an idea of what the yearly increase of value is, and you can project it out for the future. Okay, let's get into the real life example with real numbers to see if we should either keep and rent out my personal property or if I should sell it. Now, my goal with this is to break down this deal, analyze it, and give you an idea of how I would look at a property to determine if I should sell it or rent it out. And hopefully this will provide you value for if you are in the same situation, you can refer back to this and it hopefully helps you out. So the first thing we want to do is look at our home's equity. So my wife and I's personal property, we currently owe $249,104. If you look up the local comps in our area, either by contacting a real estate agent and they send it to you, or just going on Zillow and look at recently sold, our property is conservatively being able to be sold today for about $290,000 to $300,000. But we're going to be conservative and go with $290,000, which should bring us about $40,895 of equity. But remember, when you're selling your property, there are going to be expenses. Typically, it's going to cost you about 5% if you want to list your property with a real estate agent. 2.5% typically goes to the listing agent, and 2.5% goes to the buyer's agent. Also, you will have closing costs as a seller, but that's going to probably be around 2% depending on your area. So altogether, we have about 7% of what the property is going to be sold for in expenses. So if we take the $290,000, we subtract the 7% fees that we will have to pay, we come up with about $269,700. Subtract what we owe from the property, and best case scenario, we're going to be walking away $20,595. So like I said, we lived in this property for 2 out of the past 5 years, so we would be able to be exempt from capital gains tax, meaning that we would be able to actually keep all of that $20,595. But just remember, that's best case scenario. Now let's look at it as if we are going to keep it and rent it out. Our current monthly mortgage on this property is $1,601.16. And based on our local rental comps, like I said, you can either go to a real estate agent or go on Zillow, Trulia, Redfin.com and look at comparables then. In our area, we would be able to rent this out because it's a 3-bedroom, 1.5 bath for about $2,100. And since this is a single family home, the renters will be paying for all of the utilities, including trash, sewer, garbage, and electricity. So if you take the $2,100 of income every single month, subtract it by our $1,601.16, then we would end up with about $498.83 every single month. Now you might be saying to yourself, $500, that's not worth it, but the tenants will be paying down our loan as well, and we'll be getting tax benefits at the end of the year, which will help with lowering our taxable income. But let's say I was going to rent it out for 3 years. And if I were to get the $498 of cash flow every single month, that means I would receive $17,957 for the duration of the 3 years that I would be renting it out. Obviously, you would have to subtract any repairs or maintenance you would have to do to the property, but still, just hear me out. You will also be able to get tax advantages like depreciation. And over those 3 years, the tenants would also have paid off about $15,000 of my mortgage. So at the end of these 3 years, let's say we're going to go and sell it again for $290,000, which I think it would appreciate by then, but let's just say $290,000. Best case, we would receive $35,000 and we wouldn't have to pay capital gains because we would have lived in it for 2 out of the past 5 years. So by renting out this property for the next 3 years, I would be able to receive $17,000 in cash flow, minus any repairs, $15,000 in loan paydown, sell and make $35,000 best case scenario, and receive a ton of tax advantages. And that's if the home doesn't appreciate for the next 3 years. If it does, it's cherry on top. Or I could do what we talked about first and just sell it and make $20,000 now. Which one would you do? Now, before I talk to you about the free resource that you could do very easily online, let me talk about other scenarios to think about when you're in the middle of deciding on if you should rent out or sell your property. Well, you have to pay capital gains tax on the sale of your property. Like I said, if you lived in it for 2 out of the past 5 years, you could be exempt, but otherwise you will have to pay a capital gains tax. So make sure to talk to your accountant or financial planner to see what that may be, because depending on what that may be, you may either want to hold on to it or sell it. Could you take the profit and go reinvest that and maybe buy 1, 2, or 3 more properties? Ultimately trying to get a better return on investment that you're currently having now. If you were to keep this property, will it even cash flow at all? The last thing you want to do is hold on to a property that doesn't cash flow and you don't have a W-2 or income to support that. Are you even someone that wants to deal with tenants, or will you use property management? That's going to be an additional fee. So that's something you're going to have to account for when you're making this decision. Is your property located in a good area with good clientele and good tenants? I got this resource from Innovation Property Management Inc. So it is free to use. You just go online and you'll plug all of the numbers into this calculator regarding your property, and it should be able to tell you what's the better decision, but only based on the numbers, not the market or anything like that. So take this with a grain of salt. Please use it. I would encourage you to use it, but make sure you know that this is not the only factor to look at. You also want to look at your current market, your return on equity, and if you're going to pay capital gains tax. I hope this video helped you out and it brought value to you so you can make a better decision on if you're going to rent out your home or if you're going to sell it and take the profits to reinvest. Don't forget to like and subscribe, and I really appreciate everyone who stayed to the end of the video. If you enjoyed this video, I know you will also enjoy this one as well. Thank you and happy investing.